Good morning, traders. I should stop saying good morning because it may not be morning where you are. Good day. It's 8:02 a.m. Chicago time on Tuesday, the 11th of December, 2018. Hopefully you can hear me loud and clear. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Be warned, this is derivatives trading, a lot of leverage. Just take a minute. I'd like to refresh every once in a while my background and why I know what I know. Just this slide here is always the second slide that you see, and it basically outlines what I've done so far. So a lot of people talk about trading, a lot of people trade and like to share their ideas. With me, really, it's not just trading, but also having put a bunch of traders through the ringer, and developing traders, which is a whole different ball of wax. Talking about trading is one thing, developing traders is a whole lot of different thing. So when I'm discussing, really the intent here is to help those who are serious about being a career professional trader follow a routine, and to be consistent with their approach on the market. There is no right way to trade. There are many, many wrong ways to trade, and they don't have to do with a technical approach. They have a lot to do with execution. For that reason, I am posting this meme today on my Twitter feed and also on the Convergent Head Trader channel. I want to remind everyone that your focus really is about execution, right? Every chart, line, statistic, color, sound, click that emanates from your effort, from your computer as a trader has to be directed at execution. If it isn't there to support your flawless execution, it is pointless. So I just wanted to start with that. That is the goal here. If your goal is to have the most perfect chart colors and the most perfect sounds, and those really get blocked off when you're executing, there is really no point to spending the time on them. You're just wasting your time. You're essentially treating trading as a hobby, which is fine, but that's not really my purpose here. Looking at the markets today, essentially risk on so far. The news that's kind of pushing us around a little bit is that the Vice Premier Yu He and the Treasury Secretary Mnuchin and U.S. Trade Representative Lighthizer spoke by phone this morning, Beijing time, and China is expected to make an announcement on resumption of soybean buying. Also, the Chinese supposedly, allegedly, as our president has tweeted out, that they are supposedly reducing their car tariffs back to where they were before this tariff war has begun. The UK remains front and center, really, with in Europe with this Brexit thing. There was supposed to be a vote today, and that's been canceled. And Prime Minister May is traveling around looking for concessions. So there's just a ton of news flow, as you already know. It's a news-driven market right now, and so pay attention there. We got some numbers this morning. U.S. PPI and a bunch of others, the German zoo and so on. I'll let you kind of investigate those yourself. But really, this morning, risk on. We're gapping up in the equities. We're leading with the DAX, 270 points. 270 points up, or 2.55%. That's quite a bit for that product. Quite a bit of a pop there. The Euro stock's up 2.33%. Crude oil is also higher, up 86%, trading at 51.86 on the January contract. The Nasdaq's up almost 100 points, or 1.5%. The Dow is up 300 points, or 1.22%. Risk on. The money's flowing out of the U.S. dollar, trading at 97.06, or down 12.5 cents, and the U.S. Treasury 10-year note is down 4 ticks. The bonds are unchanged from settlement yesterday, so we see that the risk is solidly on. We've had a couple of pops this morning. When I started, the high was around 26.69. Currently, the high is 26.78. We've popped 9 points in the last hour or so. And so that's the mood we're coming into. What did we do yesterday? What did we expect yesterday versus what we did? Yesterday, expected a pretty choppy open. We were opening, we took back the rally, neutral extreme up on Thursday. We took that back on Friday. We tested into the upper range, and we failed to hold and just trended down all day Friday. And then what happened yesterday is we were looking to open in the point of control. I drew it right here in green, and in doing so, I expect two-sided interest here. So I expect chop, and then essentially, I was looking for as the primary idea. I was looking for it to try to pop higher, but to rotate down, take out the low. We've got these two lows right on top of each other on Thursday and Friday. Take out the low and start running lower, with 26.10 being the first stop, 26.03 being the second, 25.80 is the number I mentioned. Not sure if it was here or in the Convergent member chat room, as the next targets down. And that's basically what played out yesterday, but also we got the pop, and then we ended up testing 27.48 as well. So we had the selling coming in early and then buying into the afternoon. Technically, yesterday we finished in a neutral extreme up again. Now, it's not as pretty a neutral extreme as we had on Thursday right here, but we still had the makings of a neutral day. We have a range extension down, so we broke the first hour's low, which is the IB low, also known as the initial bounce low. We broke the IB low, and then we came back in. We had during our webinar yesterday, we talked about this really beautiful area here, the IB low, mid VWAP, and a stock zone, a pre-set stock zone in that area for a potential rotation down. And that did take place on the second test. We only use zone once most of the time, unless there's confluence. Then second test up pushes through the mid, back into the IB, and now it's caution shorts, and then we start to track upwards in this kind of a grind push, and then we end up closing outside of the IB to the top side. So we broke the IB high, which means after breaking the IB low, which it gives us a neutral day, and we finished on the outside of the IB to the top side, and then on top of that, we had the point of control shifting upwards and out of the IB. So there's a lot of trading occurring at the high, a lot of buying occurring at the high there at 26.41 and a quarter. So that's how we ended up yesterday. We ended up with a lower low. So we had a higher, on Friday, we had a higher high, higher low by a small measure. But notice the higher low was put in late in the session. It's really a selling session, even though we couldn't get it. It looks on a bar chart like it's a higher high, higher low, and it's true. But really, the way things are created in an auction is really important. So we don't look at an auction level like a profile feature. For example, a low volume node or whatever, just that's what it is. It's really important to go back and see how it was formed, because how it was formed tells you the context of what's going on at the moment. So this is what we ended up with yesterday. Okay, so we had scenario one, and then it took a lot of that back. Here's what things look like on the big picture. So if we look at what we've done for the year, this is basically the entire year here. We've had, we had a big drop in February. We jiggled around through April, March, April, and then we ground our way up to new all-time highs through September. August, June, July, August, September were really flag, push new highs, flag, push new highs, flag, push new highs. And in October, we had high volatility sell-off. We come back to the point of control right here at 27.50. We bounce up to 28.19. We fall below it. We test from below. We extend down to 26.03. And then we push back and are back into the point of control. Remember, the point of control is the most traded price by volume, or really it's not the price, it's a region by volume. And it is what we consider to be balance or equality. This is the price that facilitates the most trade and is considered the most fair price given the current information and condition in that asset class. And then we push up to 28.1750, lower high to the 19 quarter, come back, chop around in this 27.50 again. We break lower to 26.3175. We have a higher low to 26.03, push up to 28.02, lower high again. This was last week. And then we break lower and we break through that 26.3175. And yesterday we poked through 26.03. So to me, what this is saying down here is that sellers are getting something for their effort. They're getting paid for their effort, and they're making some headway. Now, with every drop that we've had, once we zoom in and look at these profiles, with every drop that we've had here, we almost immediately get some buying back, either the same session or the next day. You get this buying spree. And so what's happening is as prices go lower, they go low enough, they advertise price low enough, the buyers step in and take it right back up. We saw that last Thursday, we saw it yesterday, we see it a lot. So this is a market that really has some weak underpinnings and is doing its best to find those buyers, and it finds those buyers, but they're not having a lasting effect on the overall market. So this is the overnight session. This is yesterday right here. This is yesterday's profile in action. The overnight session opens up, pulls back into the range down to 26.28, consolidates for the rest of the Asian session and through the European Open. The European Open occurs right in here, okay, and then hold steady for a while, and then we get this pop. We do have news coming in about China, and then the market starts running away. So what we had this morning really is a profile that was almost completely balanced and holding steady. The market was trading right on top of the mid VWAP and the point of control, and it broke away. And once it broke away, it became a somewhat of a B-shaped profile, but again, caution, how was it formed? It was formed from the bottom, breaking higher, rather than what a B-shaped profile is supposed to read, or normally reads, which is to start high, not spend any time at the high, and to quickly move down so that price finds equilibrium, and then it goes sideways, and then you get this profile set up that way. But what we have here is a market that has balanced out and then has now has the energy in this volume down here, has the energy to push up, and we end up with a multi-distribution profile now. The market is still seeking value and is continuing to push. Like I said this morning, 26.69, 69.50 was the high for a while, and then we pulled back and we just took that high out by another by another 9 points, 8.5 points, and are pulling back. We are pushing into the Thursday profile now, and we're right up against the one volatility sigma on close for the pit session. So it's getting a little bit ahead of itself in terms of the price exploration. But again, it can continue. It doesn't mean that that's a good reason to fade. The market has never gone far enough until it does. There's just no way to know until it actually happens. So we have pretty good delta. The overnight inventory is currently long in price as well as in delta. Delta was pretty dead overnight, pretty balanced, and now it's positive. We're up as high as 10,700 in terms of delta, meaning more aggressive buying than selling. The volume is 3 times, still pretty high. We come in here and the volume is generally 200,000 to 300,000. So there's a fair amount of activity going on here. So we've had a pretty good pop. We've tested below last week's low, and we've popped up. This looks to me like another bounce, another bear market or a selling bounce. So I'm going to be pretty aggressive with whomever is gaining territory. Remember, kind of like Switzerland, right? I just play whichever side suits me best. Well, that's not really true. By the way, I grew up in Switzerland, so I can talk about it, I guess. But I'm looking for which side is gaining, and then I'm gonna trade from that side. This morning, looking at what is on deck, we have a gap up. We're trading up at 2671.50. We're trading inside, as I said, of Friday's range. Well, did I say Friday? No, I didn't. I said Thursday. We're trading up inside of Friday's range. There's a single print up here. The expectation is an open auction that tests higher, moves lower. I expect this gap to be somewhat filled. I don't see any key support areas until 2648 here. I'm looking for this to revert back, consolidate, and then push higher later in the session. Note that lately every pop following a strong up day has been sold over the last week or so. So I'm expecting this to be responsive versus pushing higher. The secondary scenario, the lesser probability scenario, but still there, is an open auction that slides down, pushes higher and on an impulse, and then starts walking itself back up towards that 2700 area. And I expect it to battle out 2700, and the 2700 area just above it, some key levels. The key level up there is 2711. And that may be the target, although that's quite a bit of range there, 50 points. We've seen that the last couple of days, so it's not something that's impossible. Last Thursday we went from 21 to 99, 70 points, so that's well within range. But for me, initially, I'm looking for this to be responsive down. So I'm going to be looking for. By the way, I heard somebody sent me a comment from a Twitter guy who's quite well followed, and this Twitter guy saying, "Why create scenarios that are pie in the sky when you should be present with your chart?" And there's clearly a misunderstanding here in that these scenarios are not intended to be some hyped up, here's what's going to happen, here's my prediction of the future, and I'm going to give you as many scenarios as I need to cover to say, see, I was right. That's not the point. The point of these scenarios is not to predict what the market is going to do. Don't it may seem that way, but that's not what it is. The point of the scenarios is that once you remain present with the market, but once the market follows a certain path, you the scenarios are expected to help you manage what areas are likely to be held, what areas are likely to be targeted, what are the big areas, what are the not so big areas, things like that. So it's like walking up to a general who's preparing for battle and saying, "Why do you have all these plans and moving tanks all over the place? Shouldn't you be in the moment? Shouldn't you just drop your troops into the battle zone and just respond to what happens?" And so this is what we're doing. We're going to respond to whatever happens in the moment, but this is our layout so that we can make sure that we're not holding on to one side. If I come in here with a long bias, not recognizing what is on top that is likely to present resistance and so on, then I'm not prepared to respond to that. Also, I find that without these scenarios, and remember, I've been trading for 18 going on to 19 years here. It's a long time to be trading, and this business is pretty rough on people. And I do it because I am flexible. My mind is flexible, and a big part of that flexibility is my ability to say, hey, okay, fine, scenario one is not working. They're not buying them, even though the auction is likely to put us in a direction that is likely to have a long bias. The market is not buying. So now I got to pull out scenario two and find out if scenario two works out and it's a selling scenario, then where is it likely to target? And that way when I execute, this is why we're here to execute. At least when I execute, I know to hold on rather than go for two ticks and spend the rest of the day, hemming and hawing about why things didn't work out. I only took two ticks when I should have taken 20 points. Third scenario, test the overnight high real quick, balance the inventory back, get back into the gap, and then start to work its way through this profile. I expect it to test as low as 26.30, yesterday's open, that area, and that would be the failing scenario, and the sellers step back in as prices push higher to continue this downtrend. Good luck. I know I went way over today, but it's really important to kind of get an idea of what we're after here with our scenarios and what you're after here with your effort. Execution, if it doesn't help your execution, stop wasting your time. Good luck.